Hello guys, welcome back to the Handa show. Our sole emphasis on this channel is to demystify, without use of any jargon, business terms, finance terms, so you can use that in your daily life. Because you making money is what gives me happiness. So recently, my fellow YouTuber, Stephan, he was reacting to how lump sum investing was the best thing ever. And Meet Kevin took the opposite position in a reaction video a day later, saying that dollar cost averaging was the best thing ever. But when I listened to it, there was something amiss. It didn't seem like you could apply whatever they were talking in your daily life. So I printed the report. Here it is. And I went through the whole report. I wasted my day, so you don't have to waste your life and you can have a good retirement. I usually don't like to say this because I think if I have good content, people will subscribe to my channel and like my videos because it takes too much time. It takes a lot of effort to come out with these videos. But recently I thought I should shed my reticence and shamelessly ask you for likes and subscribes. So please do it. I'm not bashful anymore. So let's look at Graham's video and see what his argument is and why he thinks lump sum investing is the best thing according to Vanguard article.
Here is the factual data you need to know. Studies have shown time and time again that the best strategy for investing your money is just to dump it all in the markets as soon as you have it, and then you just keep it there. Vanguard analyzed the entire history of the market and they found that 67% of the time, just dumping your money into the market all at once would give you a higher return than if you slowly just allowed it to trickle in, otherwise known as dollar cost averaging. Now, even though, sure, there might be a 1 in 3 chance of that strategy being less profitable, you never know what's in store for the future, and if anyone offers you a 2 in 3 chance of making more money, you should probably take it. The second,
So anytime anybody says, studies say it, they sound very smart. So that's what he's doing. He says, studies say it, dump your money in the market. But where do you get the money to dump in the market? So the study that he's alluding to, I printed it out, read the whole study so you don't have to. I'm trying to save your retirement so you're happy in your old age with your grandkids. Well, the happiness, you have to work on it. I can only work on your finances. So this is a study he's alluding to. I read the whole report. The premise of this study is, what do you do if as a foundation you receive $20 million windfall, or as an individual you receive $1 million? Are you expecting that kind of money? I don't think so. If not, what are your options? Your options are to take a little money off of your paycheck every month, put it aside, put it in the markets. That's not lump sum investing. That's dollar cost averaging. So I don't know what Graham is talking about. He's giving you advice to do dollar cost averaging, but he's calling it lump sum investing. The thing is, he makes videos every day. I don't think he has time to read all these reports. You know what I mean?
like Fidelity found that over 40 years, a $10,000 investment in the S&P 500 would have grown to $697,000 if you just kept your money invested without touching it. However, if you missed out on just the 5 best days over 40 years, your return would diminish by over $265,000.
The second study he's alluding to has relevance to your finances because all it means is be invested in the market at all times, never be out of the markets. But again, it has nothing to do with lump sum investing or dollar cost averaging because you are going to put the money into the market as the money comes to you. So that is dollar cost averaging, not lump sum investing. So Graham is saying lump sum investing, but in this video, he's not making any sense. All right, let's listen to Kevin's reaction on Graham's reaction to the Vanguard report.
Well, what I'm going to do is show you what Vanguard didn't tell you.
He's so smart. He's smarter than Vanguard.
Number 1, Vanguard manipulates their chart. See, when you look at the chart with...
You have to be a little crazy to say Vanguard manipulates its charts. There is no company in finance today which is as ethical as Vanguard. Maybe other companies are close to it, but nobody is above it. When Kevin says that, that itself gives me a clue that he didn't read the whole report. He just wanted to push out that content.
If you take $10,000 and you invest it all in one day, there is a very good chance that if you picked even 10 to 20 stocks, that 1, 2, maybe even 3 of the stocks you buy are going to be stocks that you're buying at euphoric highs.
So first things first, never buy individual stocks. You have no business buying individual stocks. He has to generate content, so he's going to talk about something, but you don't do that.
There is a beauty about dollar cost averaging that Vanguard is actually severely damaging by providing this kind of lopsided analysis. It's almost like for some reason they're motivated to get you to put money into an investment.
I don't understand this. Why is Kevin saying that Vanguard is damaging dollar cost averaging? Because this report clearly says if you have a windfall, you do lump sum investing. If you have a little bit of money coming in each month, you do dollar cost averaging. I mean, I understand these guys want views, but at what cost? By damaging your finances?
Vanguard also minimizes the difference of income. Reality is, even if you dollar cost averaged over a year, they proved you were only going to be up about 1.3 to 2.2% if you lump sum invested. And if you shorten the time frame to dollar cost averaging over 4 to 8 weeks, this is probably, honestly, I can't even say that there would even be a realistic difference left.
What kind of argument is this? So Vanguard clearly says in the report that in the first year, the difference between dollar cost average and lump sum investing is 1.5 to 2% depending upon the market. But as the time period increases, the difference increases. And lump sum investing is way more profitable than dollar cost averaging if you have a lump sum investment to begin with. And then he's trying to shorten the time frame to 3, 4, 5 weeks and says there's not even any difference. Well, I can shorten the time frame to half an hour and say dollar cost averaging wins or lump sum investing wins. What kind of argument is this? But you know one thing? Kevin never went to college. Unless you have won a lottery or your grandparents have left you a big inheritance, you have to dollar cost average. It is not the best or the worst option. It is the only option you have. If somebody leaves you a lot of money in your family or you win a lottery, then you do lump sum investing. That's the best option for you. There's a lot of truths to a lot of aphorisms. The aphorism, rich get richer, poor get poorer. There's a lot of truth to it because even in this study, because it shows lump sum investing is better for you. If you have a windfall, you put it in the market, you will do better. It's the same thing as if you come from money or your family has money, you will stay ahead of society at all times. Unless you take a conscious decision, save money and learn to invest it, then you can change your family tree, which is hard for a lot of people. But if you're listening to this channel, I'm sure you're motivated enough to do it. So be frugal, stay within your means, learn to invest if you want to change your generations to come. Point 4, I always say that investing is less about intelligence, it's more about emotional stability. Do some yoga so you can be emotionally and physically stable. So that's all there is to it. If you get a paycheck every month, you do dollar cost averaging for your investing needs. If you get a big windfall, you do lump sum investing. These guys are confusing you and saying lump sum is better, dollar cost averaging is better. It's not like that. It depends upon your situation. So listen to Handa. Watch my videos. Don't watch these videos because they give you situations or they give you answers for questions that you don't have. I will give you answers for your questions. I will solve your questions as it pertains to you and your situation. It takes a lot of effort for me to make these videos. If you have friends who are trying to invest, trying to grow in life, share my video with them. Happy investing.